Farley, and thank you for joining me. The focus of today's show will be a discussion on what to do if you find yourself in trouble with the IRS, why you need representation, some possible solutions for garnishments, levies, and seizures, as well as some secrets for paying less. To help us with this subject is Pete Losavio, an attorney with Losavio and DeJean, LLC in Baton Rouge, who is a Louisiana Board Certified Tax Specialist. Stay with us. Ask the Lawyer starts right now.
Welcome to this edition of Ask the Lawyer. Ask the Lawyer is informative and exciting. Ask the Lawyer interviews authors, speakers, and entrepreneurs in all areas of business, so you become a much more informed consumer.
Joining me today is Pete Losavio, an attorney with Losavio and DeJean, LLC in Baton Rouge, Louisiana. Mr. Losavio's practice includes asset protection, tax planning, and tax litigation. He's a certified public accountant and a Louisiana Board Certified Tax Specialist. He's a member of the Louisiana and Texas Bar and the Society of Louisiana CPAs. Mr. Losavio obtained a Juris Doctorate degree from Louisiana State University and a Master of Law in Taxation from the University of Florida. Well, with your background, you're definitely the man to help us through some of these questions. You hear horror stories, and I've had a friend who's been in tax problems, and the next thing you know, they ignore the notices. It's something they don't want to deal with, and they go to the bank to find out they're on overdraft and that the IRS has seized everything. Is that the time that he definitely needs some professional help, some professional representation?
He should have probably sought professional help before the IRS seized the money out of his bank account. There's basically 4 reasons why you want to seek professional help, and you want to seek that help as soon as possible. First, there are critical deadlines that you must meet. For example, if you're undergoing an audit and the auditor, IRS auditor, finishes the audit and issues a deficiency, a revenue agent report that has a deficiency of more than $2,500, the taxpayer only has 30 days in which to file a written report. Otherwise, that report becomes final. Then the IRS issues.
What does that mean, final?
Means that the cannot be contested. Well, it's like at that stage, the IRS moves to the next stage, moving down the pipeline in their procedures. They go to the next phase of the process of getting to assessment and collection of that liability. Like I said, the IRS has a very structured procedure of how they go about issuing an assessment and then go to the process of levy and seizing assets. And right now we're just talking about the procedures they go through when they're trying to determine the correct tax liability. So first, the auditor comes in, he audits your books, and when he finishes that audit, he issues what they call a revenue agent's report, or RAR. Now, if that has more than a $2,500 deficiency, the taxpayer has to file a written protest within 30 days. If he doesn't, then that revenue agent's report becomes final, and then the IRS issues a statutory notice of deficiency. Now this is where it really gets very critical. Once that statutory notice of deficiency is issued, the taxpayer has 90 days in which to file a petition in tax court. And if the taxpayer doesn't file that petition in the tax court within 90 days, then that assessment becomes final. And the only way the taxpayer could contest that liability is to fully pay the taxes, interest, and penalty on that liability before he can contest it.
So that's a good reason that you need somebody.
Yeah, because when you have to fully pay something before you can contest it, a lot of people can't come up with the money. Okay. Secondly, you can make a mistake and get in big trouble. For example, a guy was being audited. He inadvertently sent the IRS agent his credit card statements. The IRS agent looked down at the credit card statement and said, this guy's spending all kind of money. How is he spending all this money going to all these places on the income that he's reporting on his return? So he sent the audit to the Criminal Investigation Division of the IRS, which now it moved from being a civil matter to a criminal matter. Thirdly, you cannot control the flow of information. Most people are intimidated by the IRS. The guy was being audited. Auditor just out of the blue asked him, says, "You keep any cash?" Of course, he's going to say, "No." I guess the response was, "No, I don't keep any cash." The IRS auditor, when he got to charitable contributions, cash charitable contributions, denied him. He said, "Well, you told me you didn't keep any cash."
So that's another good reason that you need somebody who knows what can be coming down the pike.
Fourth reason is, as everybody knows, that the laws are very complex. These rules and procedures are very complex. For example, the Earned Income Tax Credit is improperly applied a lot of times. There's very large penalties associated with that.
The Earned Income Credit is something that many people take. Is that this is something that only if you specialize in it that you know that it's improperly taken?
No, people have a tendency to improperly take it on their return, and then they get audited, and like I said, the government assesses large penalties associated with that.
So if the IRS imposes penalties, can anything be done about it?
Yes.
There are many penalties, or
there are 150 civil penalties in the Internal Revenue Code, and these penalties can be abated or avoided for reasonable cause. Now, the reasonable cause defense is a subjective, and so it's determined on a case-by-case basis. Now, most tax professionals are familiar with the abatement, about how you abate or avoid civil penalties.
And at this point, when this happens, you probably don't know what to do. If you've ignored things and you've gotten into trouble, what other things, why is this so important to solve your IRS problems? It's not going to go away, is it?
Well, if you owe taxes to the government, you can't have a normal life. The IRS can come and seize your property, seize your wages. When they record a tax lien, they ruin your credit. They ruin your ability to go down and obtain financing for cars, houses, or other major purchases. You are financially handicapped. It's like trying to go down the road with the brakes on. So the best thing you can do is to settle up with the government and get back to a normal life.
And figure it out. You mentioned tax liens. What kind of property is covered under a federal tax lien?
All property that the taxpayer has. And they truly mean all, because it even includes property that you get later. For instance, if you get assessed today, and 3 months from now, you inherit property from your parents. And say this was a home you were living in, so you think you have a homestead exemption. The IRS is not a normal creditor. That homestead exemption under the state law means nothing to them.
When you say they're not a normal creditor?
Well, most creditors are bound or limited by how much they can garnish out of your wages or what property they can seize because of state law. Well, federal law is supreme, as everybody knows. The Internal Revenue Code has very few exemptions from seizure, and that's the only thing that binds the IRS.
So can they take your home? When they do a tax lien, can they take your primary residence? Nothing is safe?
Carissa, the IRS could take your homes, could seize and take your home. Say this represents your home.
Well, I have to take a break. When we come back, we'll talk more about this. Stay with us as my conversations with attorney Pete Losavio concerning what the IRS can seize continues right after this.